Welcome back to my final morning report chart analysis video on Thursday, the 2nd of February with me, Richard Perry, market analyst at Antec Markets, looking at gold. And we've rallied on gold, and the rally has continued in the last few days. We had a turnaround, bit of a volatile candle yesterday because the dollar flew around a bit yesterday. Initially, dollar gained strength on the ISM data, that pulled gold lower, and then the dollar corrected, was weaker on the back of the Fed, that pulled gold higher, and that higher move on gold continues today. So that means now we're sort of looking at a test of this 1220 resistance. 1220 has been sort of a bit of a level, hasn't it, over the certainly in November and January. So 1220 is a key level that we're looking at for near term. Break above that, and you're looking at 1233 as the initial resistance, this rally high in early November. But to be honest, I think that we're then back on the track towards a sort of rebound towards 1241, which is this key low back from October. And that would be your level I think you're getting back to. But you look at these momentum indicators, are they bullish? Well, they're mixed, and I'd say with a positive bias without being excessively bullish. RSI is above 60, so that is a positive, and sort of holding above 50 was positive for the corrective move. But MACD line's not great. Stochastics are rising, yes, but it's just a little bit cautious. And I think you've got to sort of treat this almost as a bit of a range play, because 1180, again an interesting turning point for the markets back in November, December, and a bit to a certain extent in early Jan, held the support. So you've almost got a $40 trading band there, and if you sort of break to the upside of that, you could arguably sort of project that upwards, and that gives you 1260 again. So you are sort of still needing this closing break above 1220, I think, obviously, to really break the shackles and sort of reopen the upside. But just holding off from turning bullish immediately. Here we see the hourly chart. Nothing excessively sort of strong. I mean, you've got the positive condition on the RSI on the hourly, sort of hitting 40, going towards 70. That's positive. MACD lines sort of unwinding to a neutral and bouncing. But those MACD lines are not that strong considering the rally that we saw back a couple of days ago. And you could arguably see if the market turned lower from here. That's a bit of a sort of bear divergence on the RSI as well. So it's not massively strong, but it is still positively biased, and I think we are going to get a test of that 1220 level. I think this time it does need to break out to the upside to really sort of gain that traction. But for now, we're waiting for that breakout, and I wish you good luck in your trading. I'll speak to you tomorrow.